Hey guys, so GoldStreams here again. So we're back trading the Asian session. This, like I mentioned in the last video, it's what we're going to be doing for the rest of this month. To be fair, still trying to figure out my way around this in terms of understanding exactly when volume's coming in. It's a lot easier. Sort of been trading the London session for quite a while now. Much cleaner moves. I feel like are in the London session. But again, we trade a fantastic strategy. We trade simple price action paired with support and resistance, and it keeps us profitable. So it's quite easy. It's not sort of the difficult. There's not a lot of things to look at. But here you can see the 15-minute time frame. Now, what we had a sort of close on a support being formed, and then the candle coming in, breaking the high, and then breaking the low and closing just below that support. So this was sort of the first opportunity that I was looking at, and we had a lot of green range. We had something like 100 odd pips to the downside in total, which was fantastic range. And as you can see there, I was a little bit hasty with my entry. I put my entry in, and I ended up risking around 1% of this for this trade. Okay, I didn't go full port. The reason I didn't risk 2% in this particular trade is simply because this is not a session I'm used to, right? So I'm still getting used to it. The bid price didn't actually break the low, and we paid the price for that. The candle came back in the zone. In turn, wasn't hasty, right? I just waited. Now I'm waiting for this candle to finish closing and see exactly what's going to happen. So we've got 15 minutes left for the hourly candle to close as well. Okay, so I'm waiting for the hourly candle to close on this one, and I'm just trying to see exactly what we can get out of it, and if we can get sort of a nice close that makes sense. Okay, so the 30-minute candle still open, the 1 hour candle still open. This was just the start of a 15-minute candle. Right now you can see this sort of coming back up all the way back in the zone. This is why my stop loss wasn't at the top of the previous candle, right? Because if the candle's breaking the previous low, then it's got no business coming up and breaking its own high. In this case, it did. My stop loss was around 13 pips, ended up closing at around 11 pips, right? Just before we actually went and hit stop loss, which is completely fine. We took a loss of around 1% on this trade, and now we're waiting to see how this candle can close and sort of exactly what market structure we can get to, if we can I'm still looking for sells. Buys look very, very choppy, right? As you can see, this range here isn't big. This range is around 25-30 pips on gold at the moment, where I've got my support and resistance mark above resistance there on the left hand side. Range wasn't clear. Again, you had another resistance a while back, but you had another resistance of around 20-25 pips. So buys weren't looking too clean, right? Sells were looking a lot cleaner on this particular Asian session. So that's what we waited for. Now, while we're waiting for this 30-minute candle to close, because I lost a trade, right? Because I took a stop loss, I hit a stop loss there. I'm not looking now to take another trade until candle finishes closing. It's just a rule of mine. I have to wait for the candle to finish closing. If it decides to sort of pump down and shoot all the way down, that's fine. It's going to happen. I'm going to miss the trade. I'd rather walk away with a 1% loss than me overtrade and get stuck in sort of trading consolidation. It's very easy to blow your account in that. So I'm just keeping an eye on it and just trying to see exactly how this candle is going to close. Bear in mind, we've got the 1 hour coming to a close as well. Now, if you guys follow my videos regularly, you would have seen an entry I took on the 1 hour time frame last month, so in February as well, and it was an impulse entry where we had a bullish close where the candle was respecting the previous high, but broke the previous low. Now we had exactly the same scenario, and if you remember, if I remember correctly, last month when that happened, price moved down around 80 or 90 pips. Okay, so this time we took advantage. Last time we closed at 2%, which was around 20 something pips, if I'm not mistaken. This time we took full advantage of it, and you'll see exactly what I mean. So we're waiting for this candle to come to a close, and it's got a couple of minutes left there for it actually to come through. Once this candle closes, you'll notice that the 30-minute candle closed bullish, okay, and the 1 hour candle also closed bullish, right? But the range to the top side was minimal. I mean, from where the candle closed, I think you had like 20 pips or 15 pips, something small, something. It's not a tradable range at this point. Okay, so I'm not looking for buys at all. And to be fair, after the candle closed bullish, my only criteria and my only way of entering a trade that was in my mind was if the candle was to close, if the candle was to break the low, if the next candle comes down and breaks the low, I'm entering trade. And as you can see that I'm measuring the range to the top side. It doesn't make sense. So the only way I'm going to enter trade is if the next candle comes down and breaks the lows on the left hand side, and we've got that clean range, beautiful clean range to actually fill on the downside. Okay, as you can see, the candle it came in and it broke the high straight away. It made no bottom wick, right? Red flags already. And when this candle started flipping bearish, and as you can see, first couple of minutes, it literally just came down and my entry was in there. The minute the entry was in, take profit was set, and you can see I play around with the take profit a bit. Now, the reason the keen eyes here will notice I don't have a stop loss, because if this candle was to retrace back in the zone, right, above resistance, well, above support there, if it was to retrace above support, I would have closed full position, and that would have been calling it a day, right? And that would have been me risking around 1.5%. So total risk for the day was around 2.5%, but it was what it was. And, we didn't have sort of any drawdown. Managing risk on this trade was key. You can see we're very, very patient, right? And just sort of understanding what the candles can do and what you expect market to actually, how you expect price action and price to actually move. So if the candle comes back in the zone, we're closing the position. Candle kept coming down, kept breaking the low. You can see that it's bringing us up to about 10, 11 pips, 12 pips. Not being hasty. The reason I'm not being hasty in closing positions is because of past month experience. Like I said, if you look at this on the 1 hour time frame here, you'll see exactly what I mean. It was exactly the same as the previous month, where the market just sort of came down and moved around 80 pips. So as the market's moving there, you can see I moved my like 30 pips, 34 pips there. I moved my stops to break even. Right now it's a risk-free trade, and as the sort of I'm moving my take profit around here just in case it shoots down. I don't want to get sort of slipped on that, so I'm keeping an eye on it. And around 50 pips, 45, 50 pips there, I close the trade fully. Thank you very much for watching, guys. Make sure to like and subscribe. It really does help a lot. See you for the next one.